This is a message brought to you by OneSource Benefits. Experience and integrity for over 26 years. Call us today at 1-877-549-1212 or visit us at www.onesourcebenefits.com. A fear of losing your job is often compounded by a fear of losing your health insurance. And with many people these days being confronted with that fear, whether it's voluntary or involuntary, many people are hearing the term COBRA Insurance. COBRA is short for Consolidated Omnibus Budget Reconciliation Act. It was designed to provide a vital bridge between group health insurance plans for qualified workers, their spouses, and their dependent children when their health insurance might otherwise be cut off. Here are a few things that you should know about COBRA. Certain qualifying events trigger 36 months of COBRA coverage for your dependents. Voluntary or involuntary job loss, except in instances of gross misconduct, triggers 18 months of COBRA coverage for you and your dependents. However, your spouse and dependent children are entitled to 36 months of continued coverage under these certain circumstances. You become eligible for Medicare, you get divorced or legally separated, or you pass away. Your former employer can cancel your COBRA coverage if it drops group health insurance coverage completely or goes out of business. When an employer goes out of business or drops its employees' health insurance altogether, COBRA law does not apply because there is no health plan to continue. If there are layoffs and the number of employees fall under 20, you are no longer eligible to receive COBRA. If you move outside your COBRA health plan's coverage area, you effectively lose your COBRA benefits. Let's say you lose your job in New York and decide to seek new employment in Texas. You can still enroll in COBRA, but it's not going to do you any good unless you intend to fly to New York every time you need medical treatment or a prescription. You must pay all your health insurance premiums under COBRA. Cost is a major factor to consider when buying COBRA coverage. By law, you can be charged 100% of the plan's premiums plus up to 2% of an administrative fee. COBRA can be used to protect your health insurance rights under the federal HIPAA law. If you plan to skip COBRA because it's expensive or you're hoping to find another job that offers group health insurance, think again. Consider what could happen if your job search drags on longer than you expect. You're diagnosed with chronic or serious illness, or if you're a woman who becomes pregnant. If you create a gap in your health insurance of more than 63 days, you'll lose your health insurance rights under the federal HIPAA law. This law guarantees that people who have continuous health coverage without a gap of more than 63 days can't have their pre-existing conditions excluded when they join a new group health plan. So if you forego COBRA and wind up with a 3-month gap in coverage, you would lose your HIPAA protection when you later get a new group health insurance plan. If an individual misses out on a payment, insurance coverage can be canceled. When the policy is canceled, it cannot be reinstated. COBRA law requires that the insurance company send out notices of non-payment for cancellation. Nevertheless, it is simple for an individual to miss the notice, causing an enhanced chance that the policy will be canceled. COBRA is a temporary fix to wellness insurance problems. The reality that COBRA insurance coverage is short-term can be an issue if the covered person finds a job that does not offer healthcare advantages. Professionals advise that people discover an alternative to COBRA as quickly as possible to conserve money and to get a policy that is not temporary. People typically discover that their premiums through COBRA are up to 3 times greater than personal health insurance policies. For that reason, professionals recommend that you choose an individual health insurance policy for you and your family. A message brought to you by OneSource Benefits.